Welcome to Modern Money, where we are going to discuss the future of PayPal. And we are joined today by Jose Fernandez da Ponte, who's the GM and SVP of Blockchain, Crypto, and Digital Currencies at PayPal. Jose, it is great to see you.
Good to see you again, Keith. So happy to be here.
So in full disclosure for everyone, I want everyone to understand how long I've known Jose. I've known Jose since I was at Time, and one day I get the world's nicest email from Jose and his colleague at the time, a gentleman by the name of Jonathan Auerbach, who said, Keith, we really like what you're doing at Time. Can we just chat? And we just started a relationship where I started to learn about what PayPal was doing, and they learned a lot about how I was thinking about Time. And we never had a business relationship. It really was just a friendship born out of mutual respect for the space. And from there, when I coincidentally went to MoonPay, PayPal turned into one of our most important integral partners. And Jose, I love this because it was a genuine friendship that evolved into a business relationship. And I wanted to ask you a little bit about your background first before we jumped into everything. But it's like, how did you get into crypto?
Yeah, I remember that, Keith, and that's fascinating. That was before MoonPay, before PYUSD. So if crypto years are dog years, this was like 25 years ago. It's been fantastic. So I got into crypto. I started to go down the rabbit hole in 2015. I remember very vividly, I was in a banking setup. I was working for a bank at the time. And we started to kick around a few things on crypto rails. And I've been a payments person for the last 20 years. So my interest has always been, how do we move money faster and cheaper with this thing? And way back in 2015, we started to move funds between Europe and Latin America using Ripple way back then. And I was looking at that and say, wait a minute. So we can move money in 10 minutes and it's going to show up in the other side. And what does it do for payments? And then that led to Bitcoin and a bunch of other things and led to me coming back to PayPal to help build what we have built here. But yeah, it's 9 years ago.
Wait a minute. So it was Ripple that inspired your sort of realization that you could take this space and move it into the payment space?
Yeah, if you think about innovation in fintech and payments, for the best part of the last 20, probably 30 years, all the innovation that we have seen has been innovation on the front end and the user experience and on the fraud systems. And that's very valuable innovation. But the fundamental way of moving the money around has still been on the same rails, in the same wire transfers, on the same nostro-vostro accounts, on the same interbank system. We should remember, wire transfers are called wires because they used to run on telegram wires. So that thing has been around for more than 100 years. So when I've always been very intrigued about how do you use new technology for payment rails and to fundamentally change that plumbing. And that was what got me started. Yeah, and at that time was Ripple. Then we were looking on the PayPal side at a bunch of protocols. This was later. This was like 2019. And we were moving money around in pre-production, but it was the cost per transaction was 100 of a cent per transaction. And we were looking at it saying, yeah, I know this is pre-production. I know that we're going to do it in a number of ways. It's not going to be 100 of a cent. But if it is 1 cent per transaction, we'll take that too. If you put it in perspective, if you're doing transactions at 1 cent per transaction, it's 26 times cheaper than the cheapest funding instrument we have now, that is your bank account. It's 400 times cheaper than processing a check, a paper check. So checks that go into clearinghouses and travel in planes and are up in the air. So I don't understand why we're still using checks. We should move away from that, and this technology is the way forward.
My check was phished the other day. Obviously, I would have no reason to talk about this at all other than the fact that I woke up, I looked at my bank account, and I was like, who is this person that this check went to? And it blows my mind that somebody fished it out of a mailbox and we're literally, and it's what is going on. And when I started to get into it, the sheer amount of check scams that exist today in this day and age where money can literally transfer over crypto rails for a fraction of a penny faster is incredible to me. So let me step back for a second. Let me ask you a question about PayPal. I'll never forget, because I was at Time, the day that you announced PYUSD. It's a big deal. And the thing was, wow, PayPal is really serious about entering into the crypto space. Can you step back and say, can you give us the origin story of the moment where it was like, PayPal has to move into crypto, this is the steps we took, and here we are today?
So it all started probably about 5 years ago. There is a long story of crypto around PayPal. If you remember, Braintree, which is the part of the business where we do unbranded payments, accepted Bitcoin as a payment instrument. I think that was probably 8 years ago. So it was probably too early for the market. But about 5 years ago, there was a person in our board, Wences Casares. You might know Wences. He's a fantastic entrepreneur and very skilled on crypto. And he was very much advocating for this digital currencies thing is going to be relevant. It's important for you all to be thinking about it. And we started to experiment, and we'll talk later about how we think about digital currencies writ large, crypto, but also beyond crypto. That led to some small experimentation around the protocols to that moment of, hey, we can move money around in seconds and fractions of a cent. And then we started to do what we do on PayPal, which we are very deliberate about things. We started to say, look, part of our mission is democratizing financial services. People should have access to digital currencies. And there was a ton of interest from people who wanted to start to experiment in the space, but they didn't want to understand what an unhosted wallet is, and they don't wanted to learn about elliptic curve cryptography, and they just wanted to put $100 into Bitcoin. And they also wanted to do that with a brand that they trusted. And we thought that we had a space where we could serve our customers there. So we work a lot during late 19 and 2020 to launch the first product that we had on the PayPal side, which was a very simple ability to buy, hold, and sell 4 tokens, Bitcoin, Ethereum, Bitcoin Cash, and like on your PayPal wallet. No on-chain transfers, no fancy stuff, but a really good experience for new users. And it was a moment in which, for 70% of our users, we were their first crypto experience. It was a gateway product for people to get into crypto. And then in very quick succession, we opened on PayPal, we opened on Venmo, we launched the UK and our first European Union market. And importantly, in 2022, we launched on-chain transfers. And that totally changed the game. Because so far it had been kind of you could buy from PayPal, you could sell back to PayPal, but you could not send to an external wallet. So the moment we did that, it was off to the races. So people were saying, more sophisticated crypto users were saying, hey, look, this is probably one of the best on-ramp and off-ramp mechanisms that you can go. I can go to PayPal. They have already my payment instruments. They have my identity. I can very easily get in there, buy the ETH that I want to go to an NFT marketplace and buy the NFT that I'm after. I can send it on-chain to whatever the wallet is and be done with it. You know it very well from the MoonPay side. On-ramps and off-ramps are still a big opportunity for the industry. Oh, yeah. So that totally changed our business. We have way more volume coming from that type of more sophisticated crypto users who like that ability of providing a conduit between fiat and crypto rates. And then it made sense that there should be a stable method of payment there. And that's where the idea of POUSD came out. The kernel of the idea was we think of POUSD as balance. So people have had a PayPal balance and their Venmo balance. And we thought there should be a way to tokenize that and make it available outside the PayPal wallet and outside the Venmo wallet. Also, we look around in the stablecoin space. Remember, this was way back in 2022, 2023. And we didn't see anything that we liked, that we thought it was good enough to provide for our customers. So say, hey, we want something to exist that people can trust, that is issued in the US, regulated, transparent, fiat-backed, and that has the capillarity of the PayPal and Venmo. That's what there are many stories of the months and the years that led to the launch, and it was into some of the probably worst times of history with a number of high-profile bankruptcies on the crypto space and the like. But we made it, we got live. It has been growing fantastically well, has been growing 130% this year. It's present not only in the PayPal and Venmo, but in many of the large exchanges that you can access all over the world, and obviously in MoonPay, which we are extremely grateful for.
No, listen, we love that we were able to launch with you. And I do have a few questions I want to come back to on PYUSD at a later point, but I do have one of the things that I found fascinating, and in full disclosure to everyone who's going to listen into this, we have an incredible relationship between MoonPay and PayPal, and ultimately extending into the Venmo world as well. Yeah. When we launched with PayPal, it was incredibly well received, right? And we saw the volumes go up as the algorithms started to work themselves through and whatnot. When we launched with Venmo, though, we achieved what we achieved in 5 months with PayPal in 3 weeks. I've never seen anything like this. Can you just explain to me for 1 second, what's the difference in your words? Because I have my theory, but what's the difference between PayPal and our integration with PayPal and then ultimately Venmo? And why was the Venmo one so well received in your mind?
There is a very good fit between digital currencies and the traditional Venmo demographic. And it's interesting because when you look under the hood, we were very deliberate in building the architecture, the orchestration layers, the back end of our crypto product in what is in a multi-tenant way so that we can surface that on different products. It's the same engine that is behind the PayPal experience and the Venmo experience. But my own version of the experience you all had with getting Venmo live on MoonPay is we had been live with PayPal crypto for about 6-7 months. And then we launched on Venmo. And I was working, this was deep in the days of the pandemic. I was working from my home office. One of my kids gets into my home office and say, Dad, you're going to get killed. Now there is crypto on Venmo. And I look at him and say, really? That's what you're telling me? The number of people that do not realize or do not know that Venmo and PayPal are sister products and they live under the same umbrella it never ceases to surprise me, which is my fault.
Son? Wait, your kid did not know that Venmo
My
was
kid did not know. He'll say, you're going to get killed by crypto on Venmo. I say, yeah, I did that. And he looked at me like, I don't know if I buy that. So there is definitely a different demographic on the Venmo side. Though Venmo is now so widespread in the US that, quite frankly, the demographic of Venmo is everyone across age and the like, and it's a very widespread tool. But there is sense of playfulness and willingness to experiment, and there is a convenience there that people really appreciate.
How in-depth is your son? It's his son, right?
I have 3 boys. Yeah, okay. It was one of my sons.
Are all 3 into crypto?
Yes, all 3 are. Yep.
Are
the percentage of their assets that is into crypto is unadvisable. It's obviously a very small asset base.
Of course. Okay, so did you get them into crypto, or did they get you into crypto?
They didn't get me into crypto because when this happened 10 years ago, they were very young. I don't know that I got them into crypto, but I think that it helped, which I think is relevant in the context of the role that PayPal has. I say they heard about Bitcoin and Ethereum, they heard about the ideological side of crypto and the libertarian side of crypto, they heard about meme coins, they heard about fraud, and they were trying to figure out, what do we do about this thing? Do we believe in it or not? And I think that it was reassuring to them to say, hey, that works on this, so it's probably okay. I think there's a little bit of that sense of legitimizing the sector a little bit that you get when brands, not only PayPal, but definitely PayPal gets into the space. I can tell you the day we launched our first product, there was a ton of press coverage. I spent a week getting calls from friends in the financial services space where the gist of it was, oh, if you are into that, maybe it's okay. Maybe we should look into it as well. And obviously it's not only us, it's a lot of large asset managers, a lot of the payments companies and companies like MoonPay and others. But I think that well-recognized names that getting into the space, one of the levers that does is that it makes it more present and eliminates a little bit of the mystery associated with crypto.
I couldn't agree with you more. When I was at Time and I took Time into Web3, when that first announcement went out, I think it was in March of 2021, I got much different calls than you. Everyone called me up and was like, are you on drugs? And I was like, no, are you kidding? I see this trend line so clearly. Can I float something by you for 1 second? Like, I have this theory that the reason that people can't understand the sort of unique spot, like the unique selling opportunity, or what's the outcome of crypto, is because people try to categorize crypto as a vertical. And crypto is actually a horizontal, right? And
Yep.
what I mean by that is when I was in media, television, linear television through a cable is a vertical. It either is TV or it's not. Like magazines, print is a vertical. It's either a magazine or it's not. Terrestrial radio is a vertical. It's either terrestrial radio or it's not. Digital is a horizontal, right? Anything that can be digitized ultimately will be digitized. And so what I try to explain to people is when you get into the crypto space, anything that can be tokenized will be tokenized, right? And that's a horizontal. And so the unique value proposition of Bitcoin is completely different than the unique value proposition of stable coins or the unique proposition of DeFi protocols or even meme coins, right? Which are just ultimately gambling on the blockchain, right? And whatnot. And so when you start to look at this and you start to break them down, right, you could start to see that. I haven't really floated this idea by many people, and so I just wanted to get your thought. Am I onto something? Is it that crypto's a horizontal and people try to categorize it as a vertical, or do you see it a different way?
I think you're 100% right. So if you think broad technologies that have a number of use cases, I think that you're spot on. The use case for blockchains in the business environment at least is tokenize X. If you're a PayPal, you're looking at it as how do you tokenize payment instruments. If you are BlackRock or Franklin Templeton, you're looking at that at how do I tokenize mutual funds? How do I tokenize securities? If you are Helium, you're running a mobile network on blockchain. And if you are Time, you're tokenizing time covers from many years ago. The secret power is that, and that will emerge in different verticals as an enabler for different use cases in that technology. It's not that different to the big horizontal technologies. All the vogue is on AI these days, and that's obviously a very horizontal technology. It was on TCP/IP, it was on communications networks. So I absolutely agree with you that it is horizontal. I think that it has a peculiarity, though. That I don't think of it as a vertical, but I do think that it also has a facet of being an asset class. And P was not an asset class. Usually a technology is not an asset class. But it has emerged by the way the ecosystem grew. Many of those assets have become an asset class of their own. So I think this is the first time that I've seen a horizontal technology where you can directly invest in the protocols themselves. You could not invest in the internet protocol. You need to buy. And you could not invest in Linux. You need to buy stock in Red Hat. But this is probably the first time that you can go and invest directly in the protocol.
That's actually a really interesting point. Now, how about this one? As you start to look at the internet, right, and you bring up TCP/IP and the emerging sort of protocols in which the internet was built off of, every technology that's been absorbed by the internet has actually brought the price down to zero, right? If you think about telephone calls, I grew up and AT&T used to have ads that would say, call India for $2.49 a minute, right? You know exactly what I'm talking about from the smile that I see on your face. And when all of a sudden sort of voice over IP came into play, the price of phone calls went down to zero, right? So now we can FaceTime people in India or anywhere in the world, and it's free. You can call your family members in Spain, and it's totally free. Now we're seeing for the first time ever, the internet is absorbing an embedded finance layer with blockchain technology. And you have two things that are really interesting in your portfolio that I'd love you to walk people through, which is you have a stablecoin, right, which will allow for sort of transmission of the money in a stable manner, but you also have Zoom. And I feel like Zoom is never really talked about a lot. So can we talk about Zoom for a second? Because I'm fascinated by this idea of remittances and cross-border transfers. And you start to think about a country like Venezuela, where 5% of their GDP was remittances. And we're talking about $500 billion. And you look at the traditional banking system and the traditional finance system, and Western Union or MoneyGram is taking between 7 and 13% of that money on every instance. And now all of a sudden you have a technology, and you as PayPal have multiple technologies that you could essentially transfer from, let's say, New York to Venezuela for free, for a fraction of a penny, 24 hours a day, 7 days a week, cross-border to someone's phone. When does that become a reality?
So a ton to unpack on that question. Let me start with Zoom. I love Zoom. I've loved Zoom for 12 years. I've loved Zoom before Zoom was part of PayPal.
I love Zoom. I think when you guys acquired them, I thought it was absolutely brilliant.
And I have the privilege of leading the business as well. Zoom is part of my portfolio. And I think that in itself, that as a company, we're putting the digital currencies business and the remittances business under the same umbrella. I think that it should be a good hint that we think that the impact there is going to be massive. Look, the economics, remittances is a fascinating flow, which is very stable, grows at the pace of GDP, and has been undergoing through one of the most acute digital transformations in the history of financial services. It started being a lot of cash to cash, people in the US going to a bodega, putting cash in there, and somebody is showing up in Guatemala to pick up cash in that bodega. That business is not gone, but the send side has gone very acutely digital. More than half of all remittances these days happen from the sender side are some type of digital or bank funded and going through a cell phone. The pockets that are growing more on the receiver side, there is sometimes a certain of the receiver and saying, oh, people in those countries are not sophisticated, they will not understand, they want to go to their bodega and pick the cash, and say, actually, that couldn't be farther from truth. It has moved from physical cash to bank account to a large degree. And now the fastest channels where remittances on the recipient side are happening are mobile wallets. That's growing it's still a relatively small percentage, but it's growing at breakneck speed, depositing into debit cards and stablecoins. And what happens when you're able to do stablecoins? We have moved Zoom very aggressively into stablecoins. So today you can fund your remittance, you're in the US, and you want to send money back to your family in Guatemala or Mexico. You can fund it with your credit card, with your debit card, with your bank account. If you have a stablecoin balance, you can fund it in POUSD. And if you fund it on POUSD, the transfer fees are zero. That world that you were painting, we're already on that world. You have zero fees when you fund your remittance on a stablecoin. Your family on the other side still will get quetzales or Mexican pesos or whatever it is, because we convince people one leg of the trip at a time. But beyond that, I think that this is important because I believe that's the way that mainstream adoption of stablecoins will happen. And I like your comment on embedded finance because more and more you're going to see embedded stablecoins. What we're doing now, the way that remittance works is all of us have a ton of money, literally hundreds of millions of dollars, on pre-funded accounts in the destination country. Because when you hear...
Wait, I need to pause you for a second because when this goes public, I want to be clear. Jose does not have hundreds of millions of dollars at home. So I'm on this hypersensitive on security these days, right? Like I do not have hundreds of millions of dollars at home. Okay, sorry. Okay, so PayPal.
Thank you.
Okay,
Thank
no
you.
problem. Make sure that when this gets out there, that this is not anyone saying that. Okay, so sorry.
Yeah, the industry works with pre-funding accounts because when you send money, you're saying, hey, the money is going to be in Mexico in 10 minutes. It's because the money was already in Mexico. And that is because you need to send money. It's going to take 5 days for money to move internationally. If you can move that settlement to stablecoins, the customer will have the experience that they have today. They will see fiat. The family on the other side will see fiat. What we have started to do is to move our settlement to a stablecoin, which means that we don't need to send every 5 days. So you can free up days of float, you can get better FX rate, you can get lower counterparty risk. It just makes so much more sense that is a very rational conversation that you can have with a CFO. And that leads me to that idea of stablecoin adoption happens first in the B2B space. Because for a corporate treasury use case, for companies that have money that need to move around in 100 countries, people who need to pay vendors, people who are outside of the US and need to pay an invoice in dollars. And in many markets these days, it's easier to get access to a dollar-denominated stablecoin than getting access to hard dollars. So I do believe that is how you get to a scale first on the payment side, is via B2B and cross-border payments, and then this is going to make it to the hands of retail users.
Let me ask you just from your end, and I couldn't agree with you more, like what is preventing PayPal from just turning on the PYUSD and pushing it into everything tomorrow? I always joke that companies are like Lipitor ads. Every company looks amazing from the outside, has its issues on the inside because they're humans involved. But what is it that stops, right? In my mind, you have this two-sided network. It's this most amazing, most robust, most trusted two-sided network on the world. And you could turn this on tomorrow. And what is the game plan? I assume 5 years from now it's turned on across everything, but what's between now and 5 years that's preventing that? Or what are the marks that need it to hit?
There is one thing that I keep telling the team, that we started this journey 5 years ago. So we are on year 5 of a 10-year journey. These things, and it's not only for, obviously, yes, PayPal is a large enterprise, and there is a ton of complexity associated with what we do and what many others do. And you can be ahead of the market by a bit, but you cannot be ahead of the market for 3 years. And if you are working on anything that is relevant, in my mind, more likely than not, that's going to be regulated. Whether it's financial services, or healthcare, or education, or energy, there's going to be a layer of regulation there. And you need to bring the industry along with you. It will take time. It will take time to get it into the products. That's why it's interesting when you look back and you connect the dots. It feels way more deliberate than probably it was when we were looking forward. But you first create a wallet inside of PayPal and Venmo. So which that means that, hey, there's going to be 400 million users that will have access to that eventually. We are not open everywhere in the world. So we need to do that. Geo-expansion is one thing where we need to focus. And you continue to build blocks. Then you put some tokens in there. Then you put the stablecoin. Then you embed it into remittances. Then you continue to nurture those B2B cases. We have started to do vendor payments on stablecoin. PayPal is paying our Ernst & Young invoice in a stablecoin. What does that mean?
That was like the first partner to accept PYUSD, right?
So what that happens is that now has a large corporate that is paying another large corporate, and what took to get there, it required the ERP providers. It required SAP to enable PYUSD on their invoicing module, and it requires Ernst & Young getting a crypto wallet. And the moment that they can accept PYUSD from us, they can accept PYUSD from anywhere. This innovation and adoption expands as an ink spot, and hopefully a zillion ink spots at the same time. But it's going to take a while. And we are not a move fast and break things company. We care a lot about the trust and the confidence of our users, and we care a lot about the relationships we have built with regulators over the years. So we are going to be very deliberate. If you look at our product today, you can buy very easily Bitcoin and Ethereum and PYUSD on PayPal and Venmo. There is no confetti, there is no gamification, there is education, and there is a lot of responsibility that we put under the hood on how the product is built, on things that the consumer will not see, but are there for their benefit in terms of credit limits. We are the only company that I know that we provide account takeover protection. So somebody gets into your PayPal account and steals your crypto, we will cover you up to $50,000 in accumulated lifetime value. I don't know that anyone else is providing that. And building that takes time and takes robustness. And we want to be the best crypto product in a mainstream wallet that there is. And we're going to take our time to continue to build that.
I think it's fair because when you step back and you look at PayPal, what you win on is trust, right? You win on stability and trust. Everyone knows you'll be here in 5 years. Everyone knows that they could trust that you'll do the right thing at the end of the day to protect their money. I totally get that. Can you walk us through what does the next year look like for PayPal in the crypto space?
I cannot get into a ton of detail, but I'll give you the sense. One of my colleagues, that May Zavane, who runs product on the crypto side, she likes to say, and I couldn't agree more, for some folks it's about being first, for some folks it's about being forever. And we are very much in the being forever side of it. So if you look at what is ahead for us, I said earlier, B2B and cross-border payments, I think it is where adoption happens first. And we want to be there. The idea there will be, we continue to pave the road. We continue to have now probably remittance, so settlement of remittances in stablecoin is the first true business-to-business use case that we have put in the market. There are a number of others that are on the PayPal portfolio where you will continue to see PYUSD being more and more present in our core flows. Because in the end, the uniqueness of our stablecoin is the connectivity to the PayPal and Venmo ecosystem, both on the consumer and on the merchant side. So you will see a ton of interest on making this experience available for merchants. We just enabled that for business accounts, for merchant accounts, a few months ago. It was purely a consumer product before, but now millions of merchants can hold not only a stablecoin, but also their cryptos in the PayPal wallet. So you will see B2B is going to be a big focus for us, and we want to be in more places. We are live in a number of markets today, but PayPal is live in 200 markets. So one of the things that we want to make sure is that the end vision is that you should be able to interact with our assets and our digital assets anywhere that you can use PayPal and where the regulation allows it.
Let me ask you this, though. When you step back and you look at the changing regulation in the United States, and I actually love that statement. You could be first or you could be forever. And given that I started my career at Wired, everything we did had to be first when we went to market. When I went to Bloomberg, I had to say, no, everyone else can be first. It's fine. I just have to be 100% correct. So everyone was very forgiving of me at Wired, but nobody was forgiving of me at Bloomberg. So if I pushed things forward, I had to know it always worked perfectly all the time. With the changing regulations that are going to take place in the United States, do you then still take an equally conservative approach, or do you then step back and say, okay, let's see where the world is going to change to and maybe we could speed things up? Or have you set your plan and you're going to say, we're going to hit these cadences for the next few months and next few years?
I think, Keith, that like everyone else in the industry, the last 3 months have been insane on the business side. I think that absolutely we see an acceleration. We see an acceleration in our business, and on the consumer side, we see more interest in the merchants. And you can bet that we are accelerating. It is absolutely. I think there is. Your point is absolutely correct. In some places, you can ask for forgiveness. In some cases, you need to make sure that you're absolutely right. We are very much on the you need to be right camp. And our risk appetite is our risk appetite. I don't think that it changes. But obviously, when the environmental risk lowers, then there are more things. When there is more clarity, you can move faster. And I think that's something that is important. There's been a ton of acceleration already that was happening outside of the US. So I think that we were talking of Mike about Europe and what's going on there. I think that Micah is a very good example. But it's not only Europe. It's the UK, it's Singapore, a lot of very interesting stuff is going on in Dubai and Abu Dhabi. So many markets are moving really fast. The US has been a little bit of a sleeping giant on that one. And I think that part of the theme over the next 12, 18, 24 months is going to be acceleration of the market in the US. And especially for the stablecoin dynamics, I think that's going to be really important. If you look at the 200 billion or so that are out there on stablecoins, the vast majority of that is outside the US, and the vast majority of the providers are outside of the US. So I think that we're going to see unprecedented growth in stablecoin activity in North America in the next year or so.
How does PayPal think about places like Africa or LATAM or South America?
That's part of the benefit of the network, is being able to go into those markets, right? My first job at PayPal was in the emerging markets division, and I spent a ton of time in our South American business. And I spent a lot of time in our African business. One of our very dear partners is Yellow Card, a wallet that covers a number of African countries. Talk about the promise of stablecoins. We have people today sending PYUSD from Venmo wallets into Yellow Card wallets in places like Cameroon, which is fantastic. And of course, we want them to also use Zoom, and we want them to use a number of other things. But the beauty of the technology is that it's an open rail. So you can have a stablecoin on your Venmo wallet and send it to an Ethereum or a Solana wallet that is hosted by Yellow Card in Cameroon. So that is fantastic. And a lot of our business there is cross-border. So we help many merchants in those regions who want to export and who want to sell more. And we see a lot of demand historically for people outside of the US, outside of Europe, who want to buy in some of those large merchants. And historically, they have been constrained by the availability of credit cards. And even if you have a credit card in one of those markets, in many cases, it's not enabled for international transactions. Yeah. And there is only that much that we could do. But the moment that you can enable those transactions in digital currency, imagine on the one side the service that you can do to the population of those markets, and imagine the aggregated demand that you can bring to merchants in our core markets. So I'm a believer in trade. I think that trade is important, and that ability of money to flow across borders is extremely important and is a core part of the business that PayPal has been doing for the last 20 years.
It's an absolutely fascinating idea that the internet has created a global sort of economy, like where all of a sudden all the traditional sort of barriers go away when you have this embedded finance layer. Okay, so you're 5 years into this journey. Stepping back, looking back half a decade, what lessons have you learned?
What lessons have we learned? I think that one of them is it is important for first, you need to follow the community. Many times I get a question, oh, you're deployed on this protocol or that protocol, where are you going next, what are you doing? And our view on the basic layers of the technology is we don't tell developers where to go, they tell us where to go. So we're going to go to places where there is demand. All of us have a favorite blockchain here in the team, and everybody will like one or thing or the other. And what we like or not is not important. So it's important that the community is going in a certain direction and we can support them. The other thing that I've learned, and probably has changed over the years, is you've heard about the FAT protocol hypothesis, right? In all internet, a lot of the value went not to the technology layer, went to the application layer. And a few years back, many of us, and definitely I was one of those who were saying, maybe in Web 3.0, it's going to be the other side. You can invest in the protocol now, so maybe the value capture will happen on the blockchain and not on the application. My view has been shifting on that one. I do believe that more and more is going to be the interface with the consumer and the merchant again, where most of the value is going to get captured. Obviously, I have a bias because we work on the application stage, but it was a decision that we took early in the game on where we would play. You think of the crypto stack as blockchains and protocols and applications and UX. We very early said, hey, we're going to be on the application and the UX side of it. There's not going to be a PayPal blockchain. That's not where we belong. We will use open source technology. We will use what the community is developing, and then we'll build our applications on. I think that was the right call. I think that was something that we learned in the process. And then the other is there are no shortcuts. So you need to take care of your customers. You need to respect that trust. You need to respect the relationship with the regulators. You need to play the long game. And you should be ahead of the market, but you can be ahead of the market by a little bit. I spent enough time on frontier technologies that sometimes you say, technology is here, but the market is 6 years back. And you cannot just sit for 6 years and wait for the market to catch up with you. It's not a good business proposition. So how do you navigate that of being ahead of the market in a way that makes financial sense is something that we have been able to calibrate over the years.
I love that. Like when I was at Wired, my biggest lesson learned was I thought that the tablet was going to replace all of computing, and I didn't see it as a tweener device to get people more comfortable with mobile devices. That's really where it's pushed towards. It still exists, but not at the sort of dominance that I thought it was going to exist at. It just got a very large demographic comfortable with mobile devices.
And you have mentioned Wired a few times in this conversation, which I still have my Wired subscription. I think that you need the PayPals of the world, and you need the Kevin Kellys of the world, and you need the people that who are going to be out there and be the tip of the spear.
Look, I was very influenced by Wired and by Ars Technica very early in my career, and by Kevin Kelly in particular, who has an incredible TED Talk called The Future's Defined by Optimists. And like one of the reasons that I love talking to you so much, and I love seeing you every single time, is because we could talk about such an exciting future of efficiency and effectiveness that's going to take place with all these blockchain technologies. Okay, so I have 2 more questions for you. What is the advice when your 3 sons entered into the crypto space? What was the advice you gave them that you would give to anyone else that's listening?
I think it's twofold. One of them is to remember that the fundamental drivers of historical changes are technology and the environment. And that goes back 5,000 years. If you look at what brought down empires, is either new technology or changes in climate and the environment. Technology is not a bug, it's a feature, and you need to be on the side of what's needed. It doesn't help to do the monkey thing and close your ears and your eyes and pretend that things are not going to happen. Things are going to happen. The second one is do the right thing. And I think one of the ways in which the crypto ecosystem probably could have been doing things better over the year is that there was a side of it that had an attitude of make a quick buck, and there was a ton of extreme speculation that happened. Again, go back to being forever. You need to find what is a sustainable model that will get you there. But beyond that, you need to do what's morally right. And that might be a different thing for different people, but it is a fundamentally important aspect of what we do every day in our job. And the finance and the P&L and the quarterly reports and all that, nobody will remember them a while ago. But if I can tell the team, look, in our Zoom business, we lowered the cost of remittances for millions of people who are sending billions of dollars, and that made a difference, and that made more money to get home and help people. That is what is important.
I love that. Okay, final question. Who's wearing the outfit better, you or me? Apparently we got dressed in the same outfit today.
Great minds, great minds.
Great, advice. So, Jose, I can't thank you enough for sitting down with me on this conversation. I think the world of you. I think the world of what you and your team are building at PayPal and Venmo and beyond. And I want to give people access into hearing what I see all the time for years is the brilliance of the leadership that you bring to the table. So thank you so much for joining us today.
Thank you, Keith. Thank you for having me.
Today's episode of Modern Money was hosted by Keith Grossman. This episode was researched and produced by Audrey Saccone and edited by Edgar Leal, with production support from Gabby Trujillo and the team at Trolley. Special thanks to the entire MoonPay team for making each episode possible. If you enjoyed this episode, don't forget to rate and subscribe to Modern Money on Spotify, Apple, or wherever you listen to your podcasts. And be sure to follow us on social media at MoonPay and at Modern Money Podcast. Thanks for tuning in, and we'll see you next time as we continue our conversations here on Modern Money.